Hello, everyone. I am Stephanie Fuentes with Palmer House Properties, now HomeSmart. I am a realtor in the Atlanta area, and my goal as a realtor is to educate home buyers, right? So I will be interviewing different key people that plays a part in home ownership. So today I have Mr. Wendell King. He is with Insta Mortgage. Go ahead and introduce yourself, Wendell.
Okay. Hey, my name is Wendell King. I'm with Insta Mortgage. I've been in the business for 20 years. I enjoy what I do, and I look forward to helping you.
Okay, so we have a list of questions that we are going to ask you. First, how many years have you been a lender?
I've been in the mortgage business for 23 years.
Oh, wow. So I know you've seen many different changes. What documents are needed in order to get approved?
Yeah, being around for 23 years, you kind of see all different types of programs and documents and that type of thing. But, I would say just to go off the actual list, 2 months of bank statements, last 30 days of pay stubs, last 2 years of tax return, last 2 years of W-2s. Those are pretty much what you want to start with. And then, of course, including, pretty much any type of ID, a driver's license, social security card. Those are the primary things that we'll need in order to get a person pre-qualified.
Okay, now income plays a major part in getting approved. Is there a certain time frame that you have to be employed?
Yeah, when it comes to employment, there can be different discussions on that. What we typically look at is 2 years of a person being in the same role. Now, so let's say if that person, let's say they decide to go from being a real estate agent to, let's say, being, a nurse, right? So if you want to go from being a real estate agent to being a nurse, then of course, at that point in time, you need to be a nurse for at least 6 months. But if a person want to go from being a nurse to a real estate agent, because you're going from a W-2 position to a 1099, at that point in time, you need to be 1099 for at least 2 years. So again,
Okay.
each situation is different. Got a call from a young lady the other day. She's working with the same agency. She's gonna get a promotion. She was concerned that it would hinder her from purchasing a home. However, she's in the same role. Well, she's getting a promotion. Basically, she's going to oversee more people, but she's going to be making more money. The name of her position is going to change. So in essence, she was okay.
Okay. Okay. So, a lot of home buyers get the approval confused. They get a pre-qualification instead of a pre-approval. And us as realtors, we would prefer a pre-approval because all of the documentation is looked at closely. Can you explain the difference between a pre-approval and a pre-qualification?
Yeah, there are a lot of companies out there that say just press a button and you instantly approve. In actuality, you know, I can do that as well. However, it takes a little more documentation than that to get well, it takes a little more than that. Then you enter in some information, and then once you press on the button, then of course you see an approval pops up. So of course it takes more than that to get a person actually approved. What has happened? You've actually gotten pre-qualified, even though they advertised it as a pre-approval. Now,
Right.
what does it take to get an actual pre-approval is, of course, the documentation that we talked about before: pay stubs, bank statements, tax returns, W-2s, driver's license. And then, of course, you need to explain any type of derogatory thing that's on your credit. So once we receive all that documentation, my processor will review it. Then, of course, you'll send it to my underwriter to review it. And then, of course, at that point in time, once the underwriter reviews it, she signs off on the income and the credit. Then, of course, the underwriter will issue the pre-approval at that point in time.
Okay, excellent. We love pre-approvals, and the reason why is because if we submit an offer, at least we know for sure that all of the documentation has been looked at and reviewed, and the underwriter is saying, yes, this person will be approved for X amount of dollars. It kind of helps in the closing process because you're already a step ahead. So another question that we get all the time is, my credit is not that good. So what is the minimum credit score that you would need to get pre-approved?
So we're going to look at it in a couple of different aspects, right? So if a person has, if I pull a credit report, person has absolutely no credit, that person still can qualify. Now,
Okay.
now, if I pull a credit report, a person has a 500 credit score, that person can qualify as well. The only thing about that is we would need 10% down. And then, of course, the next step up would be 580. At 580, you can get into a home with 3.5% down. So just keep in mind, no credit score at all, 500 credit score, and then a 580.
Okay. So what type of loan products do you offer?
Well, I mean, when we look at loan products, we're talking about FHA. Again, with FHA, I don't. That's not a credit score requirement. VA, VA, we can go down to a 500 credit score with VA. Conventional mortgage, we can go down to a 620 credit score with those. USDA, those are for rural areas. We can go down to a 581 credit score with that. We can help business owners who may not have filed their tax returns properly. So, which means that, so let's say if their business made, I was working with a gentleman, his business made $1.2 million, but he only showed $175,000. So of course we can work with people like that. I have another gentleman who made, I want to say he made $5.2 million. He bought a $1.5 million home, but he only showed about $300,000 on his tax return. He upgraded from an $800,000 home to a $1.5 million home. So of course that $300,000 per year wouldn't qualify him. So I use his bank statements to qualify him. I have a program where I can use what we call a verification of employment only, which means that if a person is receiving, let's say, cash from a business, as long as I can verify that that they've been receiving that cash and they can document that, then of course we can qualify that person to purchase a home. But let's close a deal like that down in Louisiana. So yeah, I mean, gosh, I mean, if a person can meet the qualifications, I can get them into a home. I have a no income option. So let's say if a person has a 720 credit score, they have 20% down, they have 18 months of reserves, they can qualify for a home without
So
any.
now I see why they call you the closer. So you can get it done either way, right?
Absolutely, ain't no doubt about it. We'll get it sorted out. If you work with me, I'll work with you.
That's right. So what is the 100% program, 100% financing that everyone is talking about?
Yeah, when it comes to 100% financing, there are a couple of different options that we can look at. One is of course VA. That's for veterans. That's
Mhm.
100% financing. Then of course you have USDA. Then of course that's in a rural area. That's 100% financing. And then of course you have down payment assistance. It's pretty much what it is in essence. So pretty much you'll finance. You get qualified for a first mortgage, and then of course you'll pretty much get a second mortgage on top of that. To combine those two, that'll get you to the 100% financing. Now, of course, there are some restrictions with that, whether it's credit score, your debt to ratio, your overall credibility. So a lot of things will come into place. Of course, we really won't know until a person actually makes an application. We can look at the overall credit and then, of course, the income to determine if they can qualify for that.
Okay. Okay. In the news recently, they were talking about an FHA MIP reduction. Can you explain what that is and why it's so significant?
Yeah, so MIP is the mortgage insurance premium that a person is paying monthly on an FHA mortgage. So
Mhm.
basically, what they've stated is that I would say over the next 12 to 24 months, there's going to be about 840,000 homeowners that are going to save about $800 per year by that reduction. So, of course, right now, since we're going into, well, not going into, but, so to speak, this recession, and then of course you have of course this inflation that's going on, so the cost of
Right.
everything has gone up, so every dollar helps. So $800 a year of course is a huge significant savings for any family.
Okay. On a average loan, how many days does it take to close?
So of course you have a couple of factors that will determine that. One, of course, will be the actual borrower. How fast can they send the documentation over? How well do they communicate? I was talking to one of my loan officer assistants today, and the borrower hasn't responded for 2 days. So
Wow.
needless to say, we're under contract. So needless to say, the the longer it takes for them to respond. You have contingencies in place. If they don't respond in a timely manner, then of course, at the end of the day, I mean, that's going to prolong that closing. Now, if you have a responsive borrower, I mean, we can, when we reach out to them, they provide a documentation in 24 hours or less. I mean, we can close transactions anywhere from, I would say from 14 to 30 days. So it just all depends on the actual individual. And then of course, it depends on the loan type. So your standard FHA, conventional, and then of course VA, you're looking at about 14 to 30 days on those. And when you get into your 203Ks, that can be about a 45 to 60-day process. The bank statement loans can be about a 45-day process. So each loan situation or each closing will be different. So each loan is just like a different personality. So you really don't know what you're going to get until you actually open it up.
Okay. So let's say first-time home buyer, they have a good credit score, they have steady income. Now they want to know how much money do they need to have saved?
Yeah, and so what I would say in this market is my rule of thumb is you want to look at, so let's say, you say I want to purchase a home for $300,000. So what you want to do is look at 3.5%. And then of course, let's say the seller may or may not pay your closing costs. So now you're talking about another 3.5%. So with that being said, so I would say you want to save in the realm of about 7% or somewhere in there in order to get you to a home.
And that's 7% of the purchase price?
That's correct.
Or what they're looking for?
Yeah, of the purchase price or what they're looking for. So if they say I want to purchase something for $500,000, just keep it in your mind as a general rule of thumb, 7%.
Okay. Well, I think that is all of the questions. If anyone has any additional questions, please feel free to reach out to me or Wendell. Wendell, can you give us your contact information and how someone can reach you?
Yeah, it's going to be Wendell, Wendall, at Insta, as you see Insta in the background, INSTA, mortgage.com. You can call me at 404-213-8145. You can call me, text me, email me. You can find me on Instagram at King, KINGTHACLSER. You can just type in Wendell King. You can find me on Facebook. You can also find me on LinkedIn. So, of course, just look for me and I'll be out there.
Okay, thank you so much, Wendell. And of course, we will talk.
Thank you, Ms.
Have a good one.
You too.
All right.